Stock's trying to bounce off the lows of the day, but the damage is done, and no stock has been hurt more than SVB Financial Group today. The share is plunging the most in more than 2 decades after the parent of Silicon Valley Bank announcing a stock offering and, well, getting rid of some things that are on its balance sheets. A lot of concern out there right now. Isabel Lee joining us right now for our stock of the hour. SVB down 60% here on the day. What's going on?
It's really a nasty reminder that this environment is bad for banks, especially smaller banks, because an inverted yield curve is a huge headwind for if you're in the business of borrowing short-term and lending long-term. At least that's what my source, Steve Sosnick, tells me. And SVB is a huge reminder of that. The stock is down around 60%. And what's happening? It started last night when they announced 3 things. The stock offering, that they will sell virtually all of their securities, and that they're revising their forecast to reflect a sharper decline in net interest income.
And what I think is interesting about this, too, is, I mean, we talk so much, Sonali, about Silvergate, which made a huge bet, of course, on the crypto world. But we kind of forget the SVB and Silicon Valley Bank, they made a big bet on that startup culture out there, which, of course, included crypto, but it's much broader than that. And that startup culture right now has been under pressure.
Yeah, I feel like this is a contagion from crypto to broader frothy tech. But I also wonder what this says about the demand for, or the sensitivity for trying to tap the capital markets at this time.
So they're completely separate, but they exhibit the same thing, that we are in a new regime because the Fed is just really raising interest rates, and that's removing all the liquidity, all the excess in cash. And the thing with SVB is the only publicly listed bank that caters to Silicon Valley companies and tech firms. And what's happening to those firms? They're gone, because not gone, but they're struggling because VCs are now stingier, they're more conservative, they demand more transparency, they're not as, here you go, here's money.
And it's a good point. I mean, one of the reasons why SVB sort of grew into the behemoth that it was is because a lot of these companies couldn't go to a JP Morgan and get financing. But I want to touch on this a little bit more, too, particularly with a lot of these fintech names. There's a big reclassification coming up with the S&P indices and the GIC standards here. So we're actually going to see some of these fintech companies, at least the bigger ones, start to move into the financial indices.
So a lot of these tech firms, because of this new rebalancing, it's basically think of it as a set of standards. It's called the GICs. Every year they reevaluate on how they will define things. And one of the big things this year is that they're redefining tech into financials. And a lot of that you'll see in Visa, MasterCard, and PayPal, for example. From tech, they're moving to financials, and that's really going to move a lot of things, especially in the ETF space. We're going to see a lot of rebalancing around that day. And it's interesting, another change they have is instead of looking at how people sell things, the mode, they're looking at the goods. So this will also impact the likes of Amazon. Because, I mean, when you look at every company these days, it's tech in a way that it's online.
And just to be clear here, so this goes into effect, I think, at the end of next week, right? So we're going to have one more week of trading, and then after that, these classifications these new ones take effect.
Yes, correct. They'll kick in around March 17, and for some on May 1st.
Do you anticipate there's going to be a lot of trading activity prior to that, or do you have to wait until after we get the change?
Leading up to that day, there will just be a lot of liquidity, but nothing really major, because everyone is expecting this. It's a very routine thing. The major change was last in 2018 when they created another sector, and in 2016 when they broke out real estate to financials.